All right, hello, welcome traders. Hey, it's Friday, end of the week. It's October 24th. Great day in the markets today. Fantastic for us. Another great week in the books. Great month on tap. I'm going to share a couple things with you today. What I want to do is get a little bit of a potpourri today, but I'm going to keep it as short as I can. But I'm going to give you a few uh, trading strategies, trading tips, philosophies, a little bit of stuff on my end. You might like it, you may not like it. I did a Ask Me Anything session today with Discord members, and these are some of the things that came up, and I thought, you know what, this would really make a pretty good little uh, video out there, just giving some ideas of how I trade. Again, whether you like what I do or not, it's all good. If any of this helps you, fantastic. I'm here for the ride. I'm enjoying what I'm doing, and if you get something out of it and can make yourself better, fantastic. So let me share what again I'm doing. Again, this is not financial advice. Always do your own research on things, but I'm always going to give you trade ideas. I'm always going to give you what I'm doing. I'm going to show you what I'm doing up or down. Doesn't really matter. You're going to get it. And This is just me tracking my journey and wanting to hold myself accountable. And Also, I get just better because iron sharpens iron. If people ask me questions, and some of you guys ask some great questions out there, some of you guys are knuckleheads. Uh, and trolling around out there. But those of you that ask really good questions, I really appreciate you. And it helps me get better when people are asking me really great questions. That's how I learn. Hopefully, that's how you learn. So let's get into it. Let's go through the accounts. I'm going to go through some philosophies. Then we'll look at a trade or two maybe at the end here today. So we're going to keep it short. Stick with me. Really good stuff. Hang in there with me. And if you like it, fantastic. Give me the likes and thumbs up down below. If you don't like it, it's all good. Lots of people out there that you can follow. So let's get into it and let's take a quick look at the two main accounts that I run with, and I think those are certainly going to help you understand a little bit more on what I'm doing. All right, let's just jump into it quickly here. Here's the Income Navigator. This is my main trading account that I trade in the Discord. Again, I joined this Discord to learn and posting my trades in there. I think it's a fantastic situation today. I mean, great questions, just so many great questions from people, which means you got a community of people that want to learn, and that really gets me excited because the more I share and the other people share on answers, and there's so many people contributing that, man, it's really just a great group of people. Love the people that are in there. So we finished the week with 506 on the delta, 0.13%. So very delta neutral from. From my standpoint, it's probably one of the lowest readings we've had. There's a 0.12 in there a couple times, but really good stuff. I love where I am at these levels to be as delta neutral with a positive bent to it because the markets are still very, very bullish. No reason to be bearish. Theta dropped a bit today, 1252, 0.33%. Why did theta drop? Well, we did roll a bunch of positions out. We closed a couple of positions today for winners. We closed a hood strangle today. We closed a core weave strangle today. And then we rolled a bunch of our covered calls on our income poor man covered call strategies out another week. Booked the extrinsic that goes with those. Really, really good stuff. Love what we do here. So every Friday, typically, you're going to see a little adjustment of theta. We ended the day up nicely, 381, 741. Good stuff. All right. So a good week and almost a $18,000 week or so um, in the market. So I'm pretty happy with that and where we are. We'll give you a little bit more view here. And we had $197,000 in BP being used, which puts me at 49%. So I've got good amounts of powder waiting to go for next week. So we'll see what happens. We got a big earnings week coming up. I'm just saving up some cash. Some things are coming off right now. So we're just letting those winners drip off, piling up some cash because after earnings, I'm going to want to get in to some new trades. Not that we're not in trades now, we're in plenty, but it's good stuff. We are up 20,240 for the month, so having a really, really good month, up 20,000, which is 5.6%, well ahead of our goals for the month of 2 to 3%. So there's the main trading account. Good stuff. You can see, again, ups and downs, ended up well for the week. And in the investing account, this is where we take a little different approach. We're looking for, 1.5% or so a month is the goal. And I'm primarily doing, I'm long some leaps. I've got poor man's covered calls, and I've got income ETFs rocking and rolling in this account. And we finished the day up nicely today, about a $9,000 gain on the session today. We booked a lot of closed calls on the poor man covered call. And then tonight, I can't wait to get up tomorrow morning because there's a ton of income ETFs and covered call ETFs that are distributing today. So after the close, we'll take a look tomorrow morning and we should have a bunch of cash. I'm expecting a really, really good month this month. And we reallocated a few things on the account as well today. So we did get our distribution from ULTY today, but as I mentioned, I'm redistributing some of these ETFs around. This is the last day for that one. I added WPay, which I like a lot better. I can avoid single stock risk with that WPay, a little bit more distributed risk. I like that ETF a lot. But I took the money from ULTY and I popped it into QQQI today to bulk that percentage up. I'm not exactly where I want to be, but again, we're having a fantastic month, up 16,000, up 3.63%, which is double what I'm shooting for. So that's pretty good. On the income ETF area, right now for the month, we have taken in over $3,217, and we are waiting on distributions tonight from SPY-I, from QQQI, from BTCI today. So we're waiting on all of those. MSTY as well. We're waiting on that one. WPay has already hit one this week, and we'll get our next one next week as well. And then lastly here, GPIX, the new one, we don't have that distribution yet, but I'm looking forward to that hitting. And then I did close out the ULTY. We made a little bit of money. I didn't keep this open long because I really wanted to move everything into I added WPay. I wanted to move the funds into QQQI. So I did close this one out. Small winner. We ended up generating a little bit over $350 in just under 2 months. Nothing big, nothing to write home about, but I did add that additional cash in here to QQQI. It will not affect the distribution this week, but I'm excited. I think we'll certainly beat hopefully $6,000 again this month. And right now on margin, we've already seen about 3.7% return so far this month, and we're going to double that. So we're going to be over 6% in dividends this month alone. So pretty happy with that. Excited to see where those go, but that's just a portion of the investing accounts. Not the whole investing accounts is not in these ETFs, and I'm okay with that, right? So we're going to keep it calm and under control for the most part. But let me give you a few philosophies and talk a little bit about some of the things that I covered with members today that came up in questions. So, take some notes, jot these down. Maybe these will help you a little bit as you go through. So let me give you about 5 or 6 different things that I really want you to think about. Come up with your own trade plan. These are mine. This is what I do. It's not financial advice to you, but I want you to understand what I'm doing. And then you can start to get those wheels turning and think about, how does this help me? So when I talk about poor man covered calls versus income poor man covered calls. Now, poor man covered calls are in the investing accounts, IRAs, things like that. That has a capital appreciation focus. Okay, that lazy trader account that I just showed you, secondly, that has those covered call ETFs, as well as a lot of poor man covered calls in it. I don't care about the income from the calls. That's not the goal. The goal is the appreciation of the long positions. And most of the time, I'll either sell or I'll buy the farther in the money, buying the in the money leaps. But most of the time, I'm doing a synthetic long, which is again going out in time with leaps, and I'm buying the call, selling the put at the money. Gives me one delta, so moves just like stock, but it costs me maybe a third of what stock cost me. Now, The great thing about that is you've got really good leverage. And if the market goes up 5%, I'm going to go up 15. Market goes up 10, I'm going to go up 30. But on the opposite side, if the market goes down 5%, okay, I'm going to be down 15%. But again, not everything is in there. We've distributed the money into other, multiple different types of holdings. So I'm pretty happy with what that is. But on the poor man covered calls, I'm selling out of the money, and I'm usually around that 15 to 25 delta. I don't want to cap my gains on the poor man covered call. I want the appreciation, okay? But I'm okay with that. And with earnings coming up, I will remove the short calls right before earnings so that I don't cap any big upside moves that are out there. So that's one section. If you talk about the income poor man covered call, which is really a strategy that I love, and I've been using it for quite a long time now, and we've been making a ton of money on it. But that's in the trading account, and that's a cash flow focused strategy. I'm trying to generate extrinsic income. So by selling at the money or even in the money calls, I generate a high degree of extrinsic. I care about the cash flow. I don't care about the underlying going up, down, sideways. Doesn't really matter because I want to be generating 1%, 0.75, 1% a week worth of extrinsic. And when you think the fact that I'm using leaps that are one third the cost of stock, well, that 1% is on the stock price, which means I'm generating 2, 3% of extrinsic on the underlying asset. So it really starts to add up over time. But I also use a dynamic strike selection where if the 8 EMA is greater than the 21 EMA, okay, I'm going to go closer to at the money. When the 8 EMA is below the 21 EMA and we're maybe heading down, okay, now I'm going to go in the money by an amount which A, buys me protection, B, still generates extrinsic. So it's all good with that. I'm just giving you some tips on how I'm doing it. But in earnings, what I will do is as earnings approach, I'm going to sell a in the money covered call, which protects my downside completely, still gives me extrinsic. And if the stock rockets up, it's okay because any losses on the in the money calls are offset by the gains. Even though they're realized versus unrealized and so forth, the unrealized gains of the longs offsets, and I make more typically on those anyway. So what I want you to make sure is, from a mindset standpoint, just don't be obsessed about day-to-day P&L on these things. Okay, you're going to have to buy back, use some cash, temporary loss on that move, but you remember you're gaining money on the extrinsic. And what I think you need to do if you trade the income poor man covered call, just track your extrinsic weekly, and it's going to change your mindset totally. Because everybody that's worried about, well, I got to buy it back, and I'm using cash, and I'm taking a loss, and then it moves the other way the next week, and focus on the extrinsic every single week. Add up those extrinsic gains that you're getting, because up or down doesn't matter. You're still getting the extrinsic value. I think you got to understand how that trade is situated. Many of you don't. You struggle with it because you're used to poor man covered calls. You don't like buying back and rolling and having to buy back for a loss. Totally understand it. Okay, it's not natural, but once you get it rolling, you're going to love those gains that we have. All right, a couple of other things for me is I don't roll. Okay? Not talking about covered calls here, but when it comes to strangles, naked puts, things like that, if I get tested, I'm not rolling. Okay, I was asked today, what happens if the stock goes below your naked puts on a strangle? Do you adjust? I don't adjust. Okay, I don't like adjusting, and here's why. Okay, I don't believe it. I don't believe in rolling the untested side down. Okay, if the stock is falling and it's at such a level that your puts are being tested, and you roll down the calls, well, at that level is typically where we might see a bounce, and now you can rocket back up past your calls, but you still might have a loss on the puts overall. Now you're going to have a loss on the new calls overall. Then people talk about, oh, go invert it. That's all nonsense to me. Okay, doesn't mean don't do it. Doesn't mean you probably can't make money doing that. You can hold on for 900 years until you finally make a profit. Okay, that to me is revenge trading. If the trade goes against my setup, I'm out. I'm gone. I'll put a new one on. I'd rather put that money in. The reason I also don't roll my naked puts down and out. Why? Because the trade's bad. Okay. The stock's going against you. Okay. Why would you want to keep trading and trying to prove yourself right? To me, again, it's revenge trading. Rolling is revenge trading. You're already booking a loss because you were wrong. And now you want to stay wrong on something that's already falling. Okay. And I'm just going to hold on until I'm proved right eventually. Okay, just think about the mindset on that is that I'm willing to keep taking losses after losses after losses so that one day I can prove I'm right and I can get out at a break even. I'm out, I'm into a new trade, I forget about it, and I'm hopefully making money on the new trade. So, anyway, my philosophy doesn't mean it's yours. You don't have to like it, but I don't. My stops are 2x loss on my naked puts and 1.5x loss on my strangles. Okay. And I take them off as all as one piece, not separately and all of that stuff. All right. So just again, some techniques from me. You don't have to use it. I'm just sharing what I do out there. A couple other things here. If I put on those synthetic longs, where I'm buying the call, selling the put, using leaps out into the future, I will usually also buy a protective put 20% below that stock price. Okay. Gives the same setup basically as buying an 80 delta leap or something. So it gives you the same exact uh, analysis look. So they look the same as just buying a leap. However, the cost is well below what you pay for the leap. Okay, so I'm still limiting my downside. I'm paying half or a third of what the leap would cost me, which is already half or a third of what the stock would cost me. And because of that, uh, I get to increase my leverage that I'm using. Doesn't mean I'm going to, go from 100 shares to 300 shares worth of contracts, or go from 1 to 3 contracts. No, don't size up that because of that. It just allows me to put on more trades and spread my risk out a little bit more. So I do like that protective put. I think that works really, really, really well. Another thing that came up today was talking about, should we jump into some of these stocks that sold off? Well, I have a 3-day rule. The 3-day rule means if we gap down, I'm giving this thing 3 days to settle and find some sort of rhythm before I'll even consider getting it. Okay, so at least 3 sessions, wait for some sort of a reversal. If I don't get the reversal in 3 sessions, I'm still staying out until I see some sort of consolidation, reversal start to happen. But the 3-day rule to me is very, very real, very, very helpful. It worked great in UNH. It works great in some of these other stocks that have sold off hard and then now may be an opportunity. One of them is Netflix right now. So, Netflix gapped down hard on earnings. Well, if you bought in right away, well, you've already dropped, what is it, from about 1115 to 1094 or something here. So you've lost like another, 16, 17, $18 or something on this. Why? Why rush in? Okay. Another rule for you is don't be first. Okay. Don't be the first one to jump into a trade that's sold off hard. Let the 3-day rule take effect. Let other people jump in, find that they're wrong. Okay. Then you can take your time. You don't have to be first on anything. If you think back to the Revolutionary War and some of those, well, look at how those soldiers marched. And they were marching where the front lines, which are typically your privates and your lower end people, yeah, you put them in the front line and they just marched forward. And they all got shot and they all died. Well, the people that were in the second line behind them, okay, some of those guys got shot, some of them made it, but the guys in the third line, okay, those guys didn't get shot quite as much. They had to step over all these other bodies here, okay, and then they could attack and advance forward. Again, stupid, way of conducting war, in my opinion, to have flanks like that. But same thing for stocks. You don't have to be the first one in. Let other people make the mistakes, and then you can get in. You can give up a little bit of your upside. All right. So there's at least a few things from me today that, hey, if you liked any of these, great. Use them. If you don't like them, it's all good. Do what's right for you, but have your rules. I'm nothing if not very rules based I don't trade by the gut, even though I've been doing this for 45 years. Okay. I still don't go with my gut. Okay. I'm pretty good at looking to see what things are doing. I'm very technical analysis related. Why does that matter? Well, I feel like it gives me at least a little bit of an advantage to know that things are going my direction or at a level that they could be reversing and moving higher so that I can make sure that I've given myself the best chance to be successful, even though the probabilities will weigh out in the end. Okay. Hope this was helpful. If you like this, great. Go ahead and give me a thumbs up down below. If you don't, it's all good. If you want to come and check out what we're doing in the Discord, we are absolutely killing it. But who isn't right now? The markets are going, up, 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 up. Okay. With that, you've got to be doing well. If you're not, you need to get some help. Find some people that can help you trade. Get into a great community like we have, and share trades, share ideas, learn a little bit every single day. Okay, knowledge will make you a better trader. Okay, but you're not going to get it by watching a bunch of YouTube videos from people like me and others out there. Okay, sure, you can get some things from this, but you really need to have people analyzing your trades as well. I hope this was helpful. We'll see you guys. Have a great weekend, and we'll see you Monday. Bye bye.